All right, today we're going to talk about a company that's kind of like an invisible giant, a company called Copart. Its stock has been on a really wild ride lately, and it's created this fascinating dilemma for investors. You've got this incredible, high-quality business, but it's clashing head-on with some really big questions about its future. It's a fascinating story, so let's dive in. So let me ask you something. You're driving down the highway, you see a really bad accident. The car is completely smashed. You just know the insurance company is going to call it a total loss. But have you ever stopped to think, what happens next? I mean, where does that wrecked car actually go?
Well, for a huge number of them, the answer is right here. It gets hauled off to this huge lot, someone cleans it up a bit, snaps some pictures, and then boom, it's up for auction on this massive online platform. And who runs that platform? A company called Copart. They're basically the essential middleman in this whole kind of hidden industry.
Okay, so let's break down what Copart actually is. How did they get to be this powerhouse in the world of wrecked and salvaged cars?
Think of it this way. Copart is basically a super efficient, high-tech middleman, right? Insurance companies, they do not want to be in the business of storing and selling thousands of wrecked cars. It's a huge headache. So they pay Copart a fee to just take care of it. And Copart, with their awesome online platform, it's called VB3, auctions those cars off to this huge global network of buyers. We're talking everyone from your local body shop to exporters shipping parts overseas.
All right, so why do so many investors just love this company? To get that, we've got to look at the bull case. And honestly, when you dig into the numbers, it stops looking like a regular company and starts looking like some kind of economic fortress. It's really impressive. Okay, just look at this number, 42.1%. That's their EBITDA margin. What does that mean? Well, in plain English, for every single dollar that comes in the door, more than 42 cents is pure pre-tax profit. That's insane. It's an absolutely elite level of profitability. You just don't see that in industrial companies. That's like software level good. And all that profitability? Well, here's what it leads to. A free cash flow margin of almost 39%. This is so key because it means the company isn't just profitable in an accounting spreadsheet. No, it is gushing actual cash. And cash, as we know, is the lifeblood of any business. Copart is absolutely swimming in it. So what do you do with all that cash? You build a fortress. That's what. Copart's balance sheet is just pristine. Get this, the company has more cash on hand than its total debt. That's incredible. It gives them this amazing stability to handle pretty much any economic storm that comes their way. And look, this isn't just some lucky accident. This strength is baked into their business model. For starters, they don't actually own the cars. They just sell them on consignment, so almost no inventory risk for them. Plus, they own the land their giant yards are on, which makes it super expensive and difficult for any new competitor to even think about starting up. Then you've got the platform itself. More buyers means more sellers, which means more buyers. It's a powerful network effect. And maybe the biggest thing? Cars today are packed with tech, right? They're way more complex and expensive to fix. That means they're more likely to get totaled, which just sends a constant river of new inventory right to Copart. And that trend is a big deal. I mean, look at this. Today, almost 23% of accidents end up as a total loss. If you go back to the 80s, that number was tiny, like 4 or 5%. So you can see this is a huge long-term shift that's just been a massive tailwind for Copart. Okay. So if this company is such a perfect, unbeatable fortress, then why has the stock been getting hammered? That brings us to the other side of the story, the bear case. Because it looks like there are some pretty serious cracks starting to show in that armor. And here it is. This is the big one, the main problem. Copart's quality? Best in class, no doubt. But its growth? It's hit a brick wall. We're talking forecasted revenue growth of just 1.7%. Now look how that stacks up against its peers. It's not even in the same league. And Wall Street, it demands growth. It demands expansion. And right now, Copart just isn't delivering. So why is growth slowing down? Well, a big part of it seems to be competition. Check out this quote from an analyst. This is the kind of thing that really has investors spooked. It basically says that a major competitor, RB Global, is starting to steal market share. The fortress? Well, it's officially under attack. And it's not just that one quote. The warning signs are kind of piling up. Their revenue missed expectations. The number of cars they got from insurance companies actually fell by over 8% in one quarter. The stock, it's down over 30% in the last year, hitting new lows. You've got half a dozen analysts cutting their earnings forecasts. And the cherry on top,
Even with all that cash we talked about, the company pays zero dividend. So if you're a shareholder waiting for this to turn around, you're not getting paid to wait.
So what do you do with this? You've got this profit machine on one hand, but it's facing some serious problems on the other. How are the experts on Wall Street reading the tea leaves? Well, let's just say they can't agree.
Yeah, this chart really tells the story. You've got some big firms like Jefferies and Baird still slapping a buy rating on it. But, and this is key, they've had to lower their price targets. Then you've got JP Morgan sitting on the fence with a hold. And then there's Barclays just coming right out with a sell. It's all over the map. There is absolutely no consensus, which really shows you what a tough spot this company is in for investors. And this really brings us to the heart of the matter, doesn't it? It's the central conflict for Copart right now. It is a classic Wall Street showdown. You have unbelievable quality versus slowing or maybe even non-existent growth. This right here lays it all out, the whole dilemma. On one side, you have the promise, right? The quality argument, that fortress balance sheet, those amazing margins, a business model built to last, with huge trends pushing it forward. But then you look at the other side, the problem, the growth argument. Revenue has stalled out. Volumes are actually going down. Competitors are chipping away at their lead. And even after the stock has fallen, it's still not cheap. That's the tension. That's the whole ballgame. So this is where we leave it. There is absolutely no doubt that Copart is one of the highest quality, most profitable businesses out there. But the market is asking a very, very tough question. What is all that quality actually worth if the company isn't growing anymore? Is a fortress still worth a premium price if it's not expanding its borders? And that, right there, is the billion-dollar question that everyone is trying to figure out.